Hey everybody, welcome to the morning market briefing Tuesday, March 8th, 2022. Let's jump right in where you would probably expect us to be jumping in. We're going to be talking a little bit about Russia, Ukraine, believe it or not. Some interesting stories coming out over the last 24 hours. As we sit here right now, Dow futures, S&P futures, and NASDAQ futures have ticked negative. They were up a bit earlier in the morning in pre-market trading. But we have seen some volatility there as it relates to the actual situation there on the ground. We're continuing to see forces kind of stall out in Russia, or the Russian troops stall out in Ukraine, but continuing to see pretty significant air raids as this battle just continues to wage on. Again, we said yesterday, a bit of a war of attrition. We'll continue to monitor the actual fighting, but I think the more interesting impact right now are the various ways in which other parties are getting involved. So Ben, I want to start with you. We do have some commentary from China. Xi says the situation in Ukraine is worrying and he's willing to coordinate with Europe and the Ukraine. What's your view kind of on the Chinese stance? And we've talked about their loyalty to Russia. What's potentially getting them into the arena where they want to play ball?
I think China's going to serve itself here. And so there are a couple strategic aims for it. One is that it can use crises to advance its ambitions strategically. Number two is try to continue to develop economically. And number three is solidify its friendship with Russia. And so what it's done is that in these statements this morning, they are saying that, hey, it's a worrying situation. They're going to coordinate with Germany and France on Ukraine. They're willing to do that. It's interesting they left the United States out of that. She basically saying that China, France, and Germany should jointly support peace talks between Russia and Ukraine, and any efforts beneficial for peaceful resolution of the Ukraine crisis should be supported, which I see as a nod that not making Russia back down, but rather easing the transition to a Russia-controlled state. And so I would be a little bit apprehensive of engaging China as a peacekeeper here, because I think that they do want to serve their own interests. Separately, later, China came out and said that they are considering buying stakes in Russian energy and commodities companies. These include Gazprom and then the aluminum producer United Rusal International. So essentially what China's coming in and doing is saying, hey, we'll broker a deal. And by the way, we're going to step in and buy some of these assets on the cheap and therefore solidify our commodity advantage going forward. The idea by focusing on the gas and the aluminum is that they can message it as, hey, all we're doing is trying to solidify our commodities and secure food and energy, because they don't want to show overt support for Russia's invasion of Ukraine. But it is very self-serving and expedient for them. And I really hope no U.S. investment banks are advising them on these deals, because I think it's just a really bad look. We're trying to do the moral and ethical thing here, not supporting Russia by putting on these sanctions. And then China's kind of coming in and undermining us by then being the buyer of last resort, buying these assets on the cheap, benefiting while we're basically giving them the platform to benefit. So I'm concerned about that. I don't know if there's anything that we can do about that, because I don't think they're going to be very willing to negotiate with us.
Thanks, Ben. Yeah, it's kind of a little bit of a tell. I mean, I think you're spot on that China's really protecting its own interests and trying to advance its own agenda, even in ways that may seem, at least at surface level, to be politically popular on the global stage. We do have some developments here domestically. Top U.S. lawmakers have agreed on a bipartisan deal that needs to be signed by the White House. It'll increase tariffs on goods from not only Russia, but also Belarus. So seeing Belarus kind of wrapped in there, it'll remove Russia from the WTO. It'll halt Belarus's proposed acceptance into the WTO and ban the import of Russian energy products. We have, even since we started kind of putting together these show notes, we do have a development as it relates to some of these bans. The White House is going to announce a ban on Russian oil, as well as coal and liquid natural gas. It will not include allies. It's a U.S. only policy. Ben, how does this impact Russia's positioning, if at all?
I don't think it impacts Russia's positioning. I think that we're trying to take the moral high ground here. The U.S. Senator Coons, the Democrat, said that gas prices are likely to go up as a result in the United States, but, quote, that is the price of freedom. And I think that that's the stand that we're taking. And it'll be interesting to see how much support that gets from the American people. It's certainly not getting support in Europe. And I think that this is a concern. We're starting to see the splintering of NATO. We talked about it yesterday. But as we stand here today, I think that the vast majority of the sanctions has already been put in place, simply as measured by the inability by the U.S. to get Europe on board with any more sanctions. So we've reached the part of peak sanctions. This is the peak pain that we can inflict on Russia. And anything that comes from here on out in terms of economic sanctions is going to be us alone acting unilaterally, which is probably not going to hinder Russia too much more, because Russia can just shuffle those commodities to another consumer, which we're finding out this morning can be China.
Yeah, and kind of interesting. I mean, Russia seems to really know where it's positioned. Deputy PM Alexander Novak said it's absolutely clear that a rejection of Russian oil would lead to a catastrophic consequence. Specifically talking about oil, speculating it could go up to $300 per barrel, if not more. Says it would take Europe more than a year to replace the oil volumes that it needs. And Russia's stance is essentially, we're not worried about it. We can send it somewhere else. You do wonder. I mean, I certainly am not disagreeing. I mean, I think sometimes when we say, oh, that we're taking the moral high ground, I think that can sound a little bit flippant or like we're sticking our nose up at them. I don't know that I necessarily disagree with doing that. I just don't know what impact it's going to have. Tom, I don't know if you have anything on the oil situation. I mean, it certainly seemed to be the root cause of the market volatility we saw broadly yesterday.
Yeah, I mean, the thing is, Europe is in a worse position we are. Obviously, Russian oil is only about 3% of our oil imports, and we could probably make that up more quickly. And I think, Germany's sitting with roughly 70% of their energy needs coming from Russia. I mean, they're not going to keep pushing. In fact, we were talking about it a little bit internally yesterday, Sam and I, that Germany might be basically looking for a way out here, looking for a reason to say, hey, maybe Russia's in the right here. Maybe Ukraine wasn't doing something they were supposed to, so they can potentially have an off-ramp on these sanctions because it's hurting them so much. So that's something, sort of a low probability outcome that I think might be boiling up, is that Germany is maybe perhaps looking for a way out here where they can kind of roll back some of their sanctions and give a little relief to their own people. But that really leads us into the next topic we have on the agenda, which is that the EU is looking to do a joint bond raise across all the countries in order to beef up their infrastructure and their military, so that they can, essentially detach themselves in the future from Russia. And it's a great idea in theory. They did a $2 trillion bond issue, basically a European Union bond, sort of like a treasury, but paid for by all of the countries last year for COVID relief. And it seems like a good idea in theory, but the best way I would put it is if you and your buddies of different economic levels decided to go in on a lake house together, odds are the guy who has the most money is going to get the most use out of the lake house and be the one who's installing the sweet new boat lift that you're going to have to pay for in the future. So if you're Greece and you're terrible with money, you've got a terrible job, but you're attached to a financial transaction with Germany, who's the guy who works on Wall Street and has all the money in the world, it's going to be a tough deal. And I think that depending on the size, it could get interesting, particularly if we run into a situation where some of these economies falter, sort of like they did in the 2010, 2011 kind of range, where Germany forced austerity measures on Italy and Germany and Spain, and there was a lot of rioting. I think this is a potential setup there. I don't think it's the best idea, but they've got to do something. They've got to get their infrastructure fixed. They've got to get their natural resources tapped. There's been a lot of movement in a lot of the bigger, more developed European countries to become green. And they basically did what we did, which is say, hey, we're going to not do the Keystone Pipeline. We're going to buy our oil from Iran. And that's how they got into this situation. So they've got to figure out a way to sort of toe the line between being green and having their own resources available. And this bond is basically a way to do that. And how can we get all 27 countries in concert to figure out their energy situation, figure out their military situation in order to be more insulated from Russian exposure in the future. But for right now, they're in kind of a tough spot.
Sorry, first time using Zoom, couldn't find the mute button. Elsewhere, switching gears a little bit to the more local economy here, Uber has raised guidance. They're looking for EBITDA range of 130 million to 150 million, a significant jump up from their 100 million to 130 expectation. They're seeing faster than expected recovery from Omicron, which I think is something that could probably be a good read through on the broader U.S. economy. Gross bookings for airports were up 50% in February over January. They expect the coming travel season to be one of their strongest ever, saying, quote, "We're seeing healthy and growing demand across all use cases, highlighting just how eager consumers are to get moving again." And I know, Tom, you and I were meeting with a potential client yesterday that's a pilot, and he said, man, domestic travel is just insane. People have the itch to just go places. We're really cooking here. So we are seeing continued recovery, but a relatively negative read from small businesses. Ben, the NFIB survey had optimism. The expectation was for a reading in the 97.3 range. We came in at 95.7 for context. Historically, we've kind of hovered around 98, but coming in at 95.7 was a decline from the previous read of 97.1. And Ben, once again, inflation kind of the driver of that.
Yep. And I think that it's going to be, with oil prices going where they are and gasoline prices going where they are, I think that if you did this survey today, that might even be a little bit more of an issue. But 68% of these people raised prices last month. That was up from 61% the previous month and a 48-year record high. Price hikes were most frequent in retail, wholesale, and construction. And then another 46% plan more price hikes going into the future. 26% say inflation is the single most important problem operating their business. That's up from 22% in December. They do say that supply chain disruptions and labor shortages are also continuing to create issues. Overall, this was a somewhat negative report catalyzed by inflation. And unfortunately, we're going to get more inflation coming here in the near term as a result of these oil prices. But I would say you have companies that are executing well at the same time. You have Uber, who just raised guidance by 30%. You have Petco that's up 7% pre-market on strong earnings. You have Dick's Sporting Goods that's up 4% pre-market on strong earnings and really strong guidance for the rest of the year. And so what we're seeing is that we're seeing this bifurcation between there's this big inflationary impetus that is squeezing some consumers, but at the same time, we're seeing this massive pent-up demand that's actually, and consumer balance sheets that are very strong, and they're actually going ahead and spending. And then you have the European situation, which is significantly worse because Europe's in a worse position from a consumer and corporate perspective than we are in the United States. So there are multiple factors going along here, and we're trying to distill all this and execute on the plan and stay disciplined to those asset allocations, while within those asset allocations, making sure that we're in the right areas to participate in the good companies and try to avoid some of the bad companies.
Good deal. And other company news, Google making their second largest acquisition ever, closing in on a cybersecurity firm that was rumored to be in talks with Microsoft. Those kind of fell apart as it wasn't a great fit. Ben, what's Google getting? And as we often ask on acquisitions, good deal, bad deal, or is it too soon to tell?
I think it's too soon to tell. They're trying to beef up their security business, especially in their cloud business. And so I think it makes strategic sense for them. I don't know a ton about Mandiant, quite frankly. It was spun off from FireEye last year, so there's not much on the record as Mandiant as a separate entity. It is Google's second largest deal ever after the acquisition of Motorola Mobility in 2012. So I guess we'll see what happens with that, but it doesn't really move the needle for a company as big as Google.
Good deal. We do have Biden coming out at 10:45, allegedly to speak. It'll probably be 11 o'clock if I had to guess. He's going to talk about holding Russia accountable. I think we will hear probably more details on a lot of the topics we just touched, such as the energy bans, et cetera. Will be interesting to see how that impacts the market. And we will go from there. We'll be back tomorrow morning at 8:30, and we will talk to you then.